the question I would have, and a lot of people are wondering, like, has Bitcoin bottomed? So for me, I'm not convinced that Bitcoin has bottomed, even if it remains higher in the dominance factor. Could it be that the altcoins are still headed much, much, much lower? Bitcoin may come down a little bit, maybe retest that 15.7 or even go lower level, but it still increases the dominance in there.
Bitcoin emerges from a hectic macro week to circle some classic trend lines near $26,000. What could happen next? After some brutal tests of traders' resolve over the past 7 days, the BTC price is still determined to hold familiar ground. Market participants are in wait-and-see mode, as a lack of clear direction characterizes the largest cryptocurrency at the start of a new week's trading. There is still plenty left to deal with from last week, however, including BlackRock filing for a Bitcoin spot exchange traded fund, ETF. Rumors are now that Fidelity Investments might follow. Hello and welcome to Money Talks. In today's video, we have Gareth Soloway shares his analysis for Bitcoin and commodities like gold, as well as the macro picture. Also his view on BlackRock's application to launch a Bitcoin spot price exchange traded fund. So without wasting any time, let's get into the video.
Yeah, I think that, from my perspective is definitely Bitcoin's on that track to be that digital gold asset. And I think Ethereum is likely the silver kind of the crypto markets. And what's interesting about gold and silver, right? So gold is your pure play where it's just a store of safety, inflation hedge, all that kind of stuff. And then Ethereum is like silver in that silver is more volatile than gold. So Bitcoin is less volatile and Ethereum is more volatile than Bitcoin. But also Ethereum has a use case, right? Bitcoin, there's, you don't really see a lot of stuff being built on top of that. So I think my guess is, and again, I could be wrong here, but my guess is the future is those two make up probably 80% plus of the overall market. And then you might have some of these other smaller coins kind of carving out their niches. But it's hard to know. I mean, and now we have, the biggest news in the last week was that BlackRock filed for ETF, right? And so the question is, and I think the big question, we saw a little rally in crypto because of this, is does this mean because there's such a mega financial institution that they talked to Gary Gensler and Gary Gensler might have said, hey, listen, yeah, Bitcoin isn't a security, so we're going to give you, the biggest financial institution, the green light. Because I think if you look at the stats, right, BlackRock's filed for like 75 ETFs. They've gotten approved on 74 of them, right? So they obviously have this kind of ability to kind of say, okay, if we're going to do this, the probabilities of success are very high. Yet we've seen the SEC reject time and time again a spot ETF. So it's kind of interesting here. What I do want to show here, and I'm going to flip over to my screen here, is I do want to go over that gold chart. A lot of people have been asking me, do you still see gold breaking out this year? We've kind of see gold languishing here. And the one thing I would just point to, and this brings us over to the stock market side of things, is that gold is stalling here. But what we're seeing is there's a massive inflow of bullishness into the market. So in general, when you see stocks like Nvidia going to new all-time highs and things, in general, you see gold falling more because it's a safety hedge, right? It's people saying, hey, I don't want to be in gold because I want to be in risk assets where I'm going to make more than a few percent on a yearly basis, which is more along the lines of what you expect from gold. And so I find it fascinating. And it's the same sort of thought process that I had when we were trading at the lows on gold in 2022 and going back to 2021 and the markets were at their highs. You weren't seeing, and by the way, this is when the Fed was raising most aggressively, and generally gold reacts very negatively to hikes in interest rates. Gold was not breaking down outside of this kind of choppiness. It got to this low end and then started to rally back. So for me, when I look at the price action in gold, gold is staying stable while you're seeing risk assets aside from crypto rallying substantially. I think the NASDAQ now is year to date up something like 38%. I mean, a massive, massive move. And so to me, this is a very bullish sign for gold. It's telling me that you have sellers that are moving out of gold to move into risk assets, but there's definitely buyers there, thus price is not falling.
In an interview with Bloomberg, ARK Invest CEO and Chief Investment Officer Kathy Wood recently discussed why her flagship fund, ARK Innovation, ARKK, is adding to its position in shares of Coinbase, Coin, after the Securities and Exchange Commission, SEC, sued Binance, one of Coinbase's biggest competitors. ARK purchased nearly 330,000 shares of Coin on June 6, 2023, worth about $17 million at the time, according to disclosure statements. Two other exchange-traded funds, ETFs, ARK FinTech Innovation ETF and ARK Next Generation Internet ETF, also added 35,700 shares, worth $1.8 million, and 53,900 shares, worth $2.8 million, respectively. Across all three funds, ARK's average entry price is $272.75 to $282.93, with the firm's total position currently valued at $1.77 billion. At the time of writing, Coin is trading at $53.90. Needless to say, the fund is deeply in the red on this trade so far. As far as why she's still bullish, her reasoning boils down to this. SEC enforcement will lead Coinbase to become the only game in town when it comes to cryptocurrency exchanges in the United States. Of course, this assumes that Coinbase will triumph in its own legal battles with the SEC. Wood explained that she sees a difference in the accusations being brought against the two exchanges. While both are facing lawsuits by the SEC over the alleged trading and staking of unregistered securities, Binance may also be facing more serious charges.
We hear that they've raised interest rates by X%, which has been huge. I mean, the velocity of the raise, I think, is the shocking part. From going from a quarter basis point to where we are above 5% is just massive. But then you look at how much excess liquidity there was in the system because of COVID. And then you look at, all right, wages have increased substantially, so people have more money. I do think, like you're saying, there are cracks emerging, right? So last Monday when we did the no-shill zone, we talked about the jobless claims from the previous week being 266,000, and that was the biggest jump since 2021 in people filing for unemployment. And what I was saying is last week, to really watch the next number, because sometimes you get these outliers, the data changes this calculation and it changes the numbers. But what we saw last week was 262,000 filing for unemployment, just 4,000 people difference. And to me, that's now saying, okay, it's probably not an outlier. You're beginning to see the effects of people getting laid off and filing for unemployment. So that would be one thing. A couple other things I'm seeing here. U.S. delinquency rates on credit cards are now rising at their fastest pace since 2008, right? So now it's not at the level, right? So the rate of change is rising, right? That's what it's equal to, but you're not at those levels. In fact, I'm going to show my screen here. This is a David Lynn, courtesy of David Lynn. And let me just throw mine in here. So here's his tweet. And I by the way, if you don't follow him, he's awesome at his data. He's a great interviewer and so forth. So definitely look to follow him. But U.S. delinquency rates on credit cards now rising at their fastest pace since 2008, although still nowhere near 2008 levels. So here you have the drive higher is essentially at that same rate, but you're still far below. So what that tells me is that people are still able to do their thing, even though the delinquencies are rising substantially. And then this one's kind of interesting as well, which says credit card debt now at all-time highs. And the reason why this is important in terms of credit card debt is because at all-time highs, if people stop paying their credit cards, it's a bigger deal to banks, right? So, if you don't pay your credit card and you owe $10 to the bank, okay. But if you own $1,000 and there's 1 million people that owe 1,000, now it becomes a bigger issue. And being at all-time highs is definitely unsustainable in the long run. The other thing too to just mention as I flip back to charts is that I also read that bankruptcies are now at their highest level since, I believe, 2011. Now it's not at 2008, 2009 levels, but you're seeing again this shift. So for me, at least as an investor in stocks, in gold, in crypto, it's kind of the yellow light. You're not seeing the red flashing like, holy cow, we're going down with the ship, but you're seeing like, okay, there is a change going on here. And then the bigger question to bring back to is whether or not does inflation go back to 2% or under for the Fed, or do they get themselves in a pickle where we stick at 3% and it makes it very hard for them to bail us out whenever that big downturn comes?
In her conversation with Bloomberg, Wood reiterated her view that Bitcoin is a hedge against inflation. Yet she also noted that she sees deflation as a substantial risk going forward. Despite this, she remains bullish on the Bitcoin price, holding firm to her $1 million target. Bitcoin experienced a golden cross back in February, with the 50-day exponential moving average, EMA, moving above the 200-day EMA. Volumes have been declining, along with the Chaikin money flow, suggesting the potential for sideways trading for the time being. Even in a deflationary environment, Bitcoin can still outperform due to it being an antidote to counterparty risk in the traditional financial system, according to Wood. Given that 3 of the 4 largest bank failures in U.S. history have occurred in the last 3 months, she could have a point. The next Bitcoin halving event is less than 1 year away. Investors are currently in the accumulation phase of the cycle.
I think it's important, and I've seen this narrative get lost, but it was around 3-6 months ago, which is that the Federal Reserve has never really engineered a soft landing, right? I mean, and again, so I think the market right now is like, oh, they're going to do it this time. It's almost like you're rooting for your team, but they haven't won the championship any past year, but you just willing to believe, because we all want to believe, right? I mean, we want to believe that everything's going to turn out good. That's human nature to want to believe that. So I think a couple things to look at here, going back to my chart here. I apologize. Let me add mine to the stream here. Is that number one, take a look at interest rates. And remember, the Fed basically came out and said, we're going to have to hike more this year. And the market was like, ha, dream on. We don't believe you at all. I mean, literally the market was like, nope, we don't believe you. But if you look at the 10-year yield, this is a very interesting pattern. This is actually a bullish channel of consolidation on the 10-year. And if it breaks above this 3.9 level, you're at least going back to 4.3 and potentially higher. And again, the question then is, how does that affect the overall stock market? The other side of the coin, too, is you can see that we've been holding these are 2 parallel lines. You can connect these lows here, and it's perfectly parallel as well. So there's a lot of support down here. And you have this bullish channel that, again, eventually bullish. When you have a downsloping channel, the thought process is eventually price breaks out to the upside. You don't necessarily know when, but downsloping channels break out to the upside. So if that does happen, that puts me in a position where if we look at the S&P 500, you have to wonder, okay, well, are we going to get to all-time highs? And if we get to all-time highs, is it on this hopium? And again, markets can do that in light volume summer months. We can continue to rally. I mean, it's clear as day that we've been doing that right now with the narratives that have been pushing about this perfect landing. But again, for me, this is a situation where I would not personally feel comfortable buying in at Apple at all-time highs, Microsoft at all-time highs. And by the way, I mean, Microsoft last week, all-time highs, but look, it had a pretty nasty reversal right off that double top right there. One thing to just show on the NASDAQ on the QQQ chart is that there's some major confluences of trend lines right in this area. So I'm a big fan of channels, and how channels, for some reason, human nature is to make, factors or structure out of chaos. And if you connect the lows here on the NASDAQ going back to 2021, and it connects perfectly through here, 2022, late in 2022, and right here in early 2023, and you drag a parallel up to the all-time highs, you actually get this pivot, and then where we are currently there. Then if you look at this high, which was just before the COVID collapse, the highest point on the market before the COVID collapse, it connects perfectly through that high, these lows here, then this low, we broke below it, and then we retraced to it, and then look at where we are. We're right in that midst right here as well. So at least from me, again, the one thing, the market has a tendency to kind of make you question yourself, make you almost want to flip. It makes most people flip from bullish to bearish or bearish to bullish just before it flips the other way. But the charts are the charts, and there's some major signals to me that we're probably closer to the end of this run in the S&P than not, as well as the NASDAQ.
So, will the next cycle top see Wood's $1 million price prediction come to fruition? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.